Hey everyone, I want to shoot a quick market update video. Today is January 17th, 2023. And this is a quick update as to what our team is seeing in the marketplace so far this year. We all know transaction volumes are down. They're at least down by 50%. The data is not out yet because the market is still finding its balance. The comps are hitting, a few comps that are hitting. We're establishing new pricing. It's really led by interest rates. We all know that. We know that it's interest rate driven, making deals really tough to pencil. Sellers mostly are saying, my properties are performing very well. Why should I discount my real estate? And buyers are saying, hey, the cost of capital is so much higher now. I need to reprice the value of your property in order to make it pencil. So both folks are right, both buyers and sellers, and we're not seeing deals come together. I anticipate 2023 just to be a challenging year for transactions, but there are going to be great opportunities that come out of this. Just a live update, we're putting together a few assets that we put under contract and remove contingencies on moving forward in this year. And really what it comes down to is finding a quality asset where a buyer is saying, hey, I like this asset, I can make this work, I can arrange debt that's going to make sense for the purchase. And I'm willing to buy now versus waiting because of the asset that I found is worthy of that. And it's okay if maybe the market reprices a little bit. I'm not getting the best deal, but I'm getting the right real estate. And as this will cycle out, and with a long-term view approach, you've got a great asset, because it's so hard to time the market and then time the market right and get the right asset at the bottom of the market. So I think it really comes down to, if you're going to be buying today and possibly seeing erosion in equity as you acquire an asset today, potentially that could happen. It's got to be an asset that is hard to come by or very hard to replace. So I think we're seeking assets that follow that criteria. Another thing that we don't know about is fundamentals going to adjust within the marketplace? Are we going to see vacancies go up, occupancies go down? Are we going to see rental market rents flatten or reduce? We don't know. I'm starting to see concerns of that. I'm also seeing a lot of investors saying, hey, look, the max allowable rent increase right now is 10% for properties that are subject to AB 1482, but maybe I'm not going to bump rents 10%. I don't know if I'm going to create a lot of turnovers. I don't know if that's something I want to do right now. So I'm going to maybe peel back the max allowable rent increase and maybe only do 5% or 6%. We're also seeing investors say, hey, look, I was spending $35,000 to $50,000 for a unit turn in 2020 or 2021. Now in 2023, I'm going to pull back those renovation costs if possible, adjust maybe the fit and finish, and try to drive down some of those costs to then make the numbers work. And then also look at affordability on my rent projections. Maybe I don't have to put in as much money. I don't have to charge as much in rent. It's not as expensive for the tenant. Maybe that'll help leasing. Maybe that'll help renewals. Those are going to be things that are much more important in 2023 as we look into going into a recession. So that's some of the things we're looking at. Loan assumptions have been challenging. Not everyone, but a lot of banks don't really want to make it that easy to assume the existing loans. And we're dealing with a lot of those where it's assumable debt. However, there's language in the loan docs where the lender can take the rate to market, or they have to approve the loan assumption. Or they want you to buy down the existing loan substantially to where it doesn't make any sense to assume the loan. So we're dealing with some of those right now, and I think it just reminds me of a time where we stick with the market leaders of financing within the marketplace. To name a few, Chase banks, the First Republic banks, there's others out there, but the folks that are out there lending right now, it might not be the best absolute rate, it might not be the best absolute loan to value, but those loans can be assumable. We've done a number of Chase assumption loans and they worked out well. We know if we get LOIs from the banks that are reputable in the marketplace, they're not blowing out in the 11th hour or renegotiating on us. And we need to stick with those lenders. So if anybody knows any lenders that are active and leaning in and doing what they say they're going to do, let us know. We want to make sure that we provide the best capital sources within the marketplace right now. And that's really important to do that for buyers and then also for our sellers. So that's a very important factor in 2023. It always is, but especially now. But those are the things we're looking at. The exchange market, we're all looking for the same exchange buyers in the marketplace as brokers. There's a lot less exchange buyers in the market. So we're all fighting for the same exchange money, which is creating a great opportunity for an exchange buyer because hopefully you have options. It is very challenging still with inventory. There's no inventory on the market. If it is, a lot of it's marginal. There's nothing special. So a lot of those deals aren't selling because those have really got to be priced right. If it's a marginal asset, if it's an exceptional asset, those assets are probably getting offers, multiple offers, or getting strong interest from one or two buyers. And those are the assets that we're putting together and brokering. And there really hasn't been much of a discount in general on these assets. So those are the things that are on my mind right now. That's the things that we're dealing with on a daily basis as a team. If we can help out in any way, let us know, and we wish you the best in Q1 and throughout 2023. We'll update more as things progress. Thanks so much. Bye.